There it is. Now it's back on. Wonderful. All right. Thank you, Jenny. All right. So who's Frank the Banker? Most of you guys already know me. We'll do this part real quick. I'm a fourth generation tampon. That's right. Extra absorbent. I put up with all the crap. Tampa Jesuit, Florida State University. My son's going there now, playing hockey. Proud dad. Married high school sweetheart. 2 kids. I got a 14-year-old daughter who's going on 30. That's great. You got to go see the post that I put on my Instagram recently with me and her in the car, and I was trying to talk her language. It's freaking hilarious. Got 10,000 views, and she hates me for it, which is even better. Founded Lincoln Lending in 2003, so we are in business 23 years in this crazy world, in this crazy business. I built the company on a premise to have a loan for everybody, and that's what you'll learn today and through some of our questions. If you guys call me and I don't have a product, Char knows, you're gonna call somebody else, right? So I have to stop that, and the only way to stop that is to have a loan for everybody, right? So I have to have the solutions. Lincoln Lending Group is a company that I founded, and again, we specialize in all loans. So like I said, Jenny and I are gonna do this a little different today, but before we do, there's gonna be 2 chances to win a guest appearance on the Business Happy Hour radio show. Everybody grab a card, and if you didn't already, throw one in, because I didn't ask you to. Jenny's gonna walk around, let you throw one in. At the end, we're gonna spin it, and somebody's gonna win. Yes, just like Vanna, yes. And we're going to pick somebody to be on the radio show. And don't be scared, it's really easy. If you've never done it, you can see that I obviously like talking, so I'll talk you through everything. We'll have a lot of fun. Mari actually came on the radio for the first time. What'd you think, Mari?
It's a lot of fun. I can't wait to do it again.
Yes, all right. And she was her first time on there, and she absolutely killed it. And listen, you're gonna get business from this, by the way. So when you come on the radio show, make sure you have a listing to talk about. Go.
I got 3 loans off that video.
Did you really?
Yes.
This is crazy. That's awesome. And she, by the way, Mari is one of our originators at Lincoln Lending Group. God, you're the only one here? Yes, you are. Wait, who's here? Oh, Kim. My God, I didn't even see you, Kim. I'm so sorry. So Kim and Mari are the 2 originators, and that's Claire. She was one of our top managers at Lincoln Lending Group, so thank you, Claire, for putting everything together. So we'll draw that, and then I'm going to do a trivia question during the middle too. If you've already seen the presentation, let somebody else win on the trivia question. At least try to. Do your best. We don't have to go around and meet each other. I'm sure you guys are awesome agents, but I'm not going to stand here and waste your time. We got to get on with the show. That's really for the smaller groups. We do have reviews, and we just revamped our website, lincolnlendinggroup.com, lincolnlend.com, 813mortgage.com. We actually have some reviews that are not 4 and 5 star. You know why? Because we're real, and we don't quarantine our reviews. So if you ever run into a company that got all 5-star reviews, what does that tell you? They are FOS. Yeah. Exactly. Either you've been in business for 6 months, or you're just quarantining your reviews and you're full of it, right? Because that is absolutely impossible to not have at least one crazy person put something crazy on your website. And the funny thing is,
you're really doing business.
It does. It's right. And I don't even hide them on the new webpage. I wanted the Google to scroll on the bottom, and I told the web guy to do it. And he goes, "Oh, go check it out." The freaking only 1-star review we have from a crazy person was the first one on the scrolling on the bottom of the page, and I'm like, God, can I at least move that one over a little bit or something? But anyway, it legitimizes us. And I know it's a fake review because it doesn't mention anybody's names. It doesn't mention Lincoln Lending Group. Doesn't mention even Tampa. So I'm like, okay, believe what you want. But anyway, we do have great reviews. We have a very diverse group of people that work for Lincoln Lending Group. You can choose any walk of life that you want to work with. When you go on Lincoln Lending Group's staff profile page, when you click on one of these pictures, it brings you right to their contact information and right to their application page. So you don't even have to remember it. And you don't even have to remember Lincoln Lending. Just remember 813mortgage.com, and you can get to all of our stuff from there. Some of you had the pleasure of meeting Beverly, our VP of Ops. If you've worked with Lincoln before, you've probably worked with the guru, Jeff Sebring. Very, very fast, one of our VPs who handles my personal files. You can follow us on YouTube if you like. I do have a YouTube channel with a lot of longer format videos. We do a lot of reverse mortgage education on there, and you'll see all of my radio shows on there. We have those things on your little flyers, though. You can scan my Linktree or scan my Instagram. I would tell you to follow Instagram. So Jenny, this is our first one. Boom. How do we want to start this?
Just click it. So here's your problem, right? You have the house, so the buyer qualifies, but the house won't qualify for financing. Maybe they love the house, but they don't have the money for the down payment and the repairs that it needs. So maybe it failed an inspection because the roof needs to be replaced, air conditioner, Or maybe they want to buy the house, but they love the bones, they love the neighborhood, but they want to update the kitchen, they want to update the bathroom, but they don't have the money to buy the house and then spend that cash again right away. So, Frank, tell us a solution for this buyer.
Thank you,
these
Vanna.
buyers.
All right. Construction, renovation, and vacant land. I threw in vacant land because it kind of goes in line with this. But we'll start with renovation because that's what the problem that Jenny just presented. Renovation loans can save you whether you're in contract now or your buyer finds a house that he wants to buy that needs work done on the house. Very simple how the renovation loan works. The old way to do it, excuse me, was you buy a house that needs work, you put down your 20% or your 10% or whatever, then you go and fix it up. Now that's if the house even qualifies. That's if it even passes appraisal, right? These are more wants than needs, okay? But what happens is the client has to come out of pocket 50 grand for the reno or 100 grand. So let's do some math. The client knows he wants to renovate the house for $100,000 afterwards. He wants to put 10% down on a $400,000 house. The old way is 40 grand out of pocket plus closing costs, then 100 grand to fix it. You're out of pocket 140 grand. The new way with the renovation product, which is FHA and conventional, by the way, you take the 100 grand, you add it to the purchase price of 400,000, and you put your 10% down. That's 50 grand. You just saved your client $90,000 out of pocket. This can be on a house that they just want to renovate, want to change things, want to put gold toilets, want to do whatever they want to do. We throw it into the reno loan. The solution, the question that Jenny asked was, what if it fails inspection? Simple. We flip the loan from a regular FHA or a regular conventional over to a renovation loan. Keep it generally with the same underwriter. Sometimes you might have to switch depending on how bad it is. And we incorporate those repairs into the actual purchase. The roof and stuff gets done after closing. No escrow holdbacks, no seller coming out of pocket. Any questions on any scenarios you've had on that?
Yes. Can it be a bank statement or just the FHA convention?
Great question. So there are non-QM products like bank statements and DSCRs for that, but that is really reserved for investment properties. So if you're going to be primary, great question, Paula, you have to be conventional or FHA. Yes, you got it, for the renovation. Now for construction. All right, reason we talk to a bunch of real estate agents about construction is a lot of people are wanting to build their own houses right now. And the old way, or the way that a lot of banks do it, is they come to you, you find them the land, then they close on the land with the bank, one set of closing costs, right? Then the bank gives them a construction loan to build the house, interest only on the draws, right? 2 sets of closing costs. Then when they're done, they have to do an end loan. They have to lock it in on a Fannie Mae or FHA or VA loan. 3 sets of closing costs. Essentially, you're paying closing 3 times, right? We do it 1 time. It's called OTC, one-time close, okay? You find them the land. They have their contractor / builder. They give us the estimates on what it is. We put the 2 together. We close the construction loan at the time of the purchase of the land. You do not have to own land to do a construction loan. If you own the land already, you're probably not involved because they don't need you to find anything, but if you just want to help out a client, you bring them to us and we get to use the equity in the land as their down payment. So if the land is worth 100 grand and they're building a $400,000 house, it's a total of 500,000. 100 grand is their down payment. Guess what that is? 20% down. You're going conventional with no PMI. Make sense? Very, very easy for construction. So for your purposes, when the guys want to find land and they're ready to build, that's the program. Now let's move on to the client who simply wants to, and here's a couple guidelines on it, but I speak it quickly for you either way.
Frank, so here's a question that comes up a lot of times with the construction of perm is like, but if it's a seller, like let's say it's a listing of vacant land, it's on the MLS, there's a seller of this land, like how do we just close on the land and then what does the seller get? Because if the overall contract is for the total amount, how do we make sure that the seller just gets what the seller gets?
That's a great question. So here's what you're doing. You're just writing a contract on your land. You are not worrying about what I'm doing with your buyer on the construction. When I go into underwriting with my underwriters, I'm approving them for the construction loan and we are closing on your land contract. So that's a great question. It will not complicate your transaction whatsoever. You can still make all your commission, do everything you do. All your commission is only based on your land sale. You guys are really exclusive, mutually exclusive of the construction financing. We're just focused on your land. Now, when the guy wants to just buy land, He wants to be a landowner. He wants to buy some timber. He wants some vacant land. He's going to sit on it. He's going to hunt
He's
on it.
John Dutton from Yellowstone.
He is John freaking Dutton from Yellowstone and wants to keep my land.
Own all the land.
He wants to own the land. We have. Whoa, well, I took that slide out, I think.
No, I think it's.
Oh no, is it the next one? Hold on. Oh,
But
that's
if they
right.
want to own all the land.
That's right. You have vacant land financing. That's right. You can lend somebody on a timber forest. You can give them a loan to get 5 acres of land, 10 acres of land, 100 acres of land, whatever they want. We have 2 land-only programs. Really, it's going to be depending on the person's income and credit and their down payment. If they want a long-term land loan, they're generally going to need 35% down. The bank's going to want to do 65% loan to value. We'll put them on a 20-year fixed, on a long-term product. Interest rates usually in the 7s. It's a good long-term land loan, and they can sit on it and do nothing. All the banks in town tell you if they give you a land loan, they're giving you a year, maximum 2 years to build on that land. That's not this type of loan. This is sit on it for as long as you want. When you're ready to build, use your equity to build. Does it make sense? The other product will allow you to put down as little as 20%, but they're just going to give you a 10-year fixed loan. So it's a much higher payment, shorter amortization, but less money out of pocket, and they're a little more lenient with the types of income you can use. Any questions on land? Here's one of the only caveats. Land means land. It's not supposed to have houses on it, right? Not supposed to be an old dilapidated mobile home on it. Can you get it removed? Absolutely, before closing, right? Could it have a shed or maybe a small barn or a lean-to? Anybody who knows what a lean-to is? Right, any country people in here? Right, so lean-tos, those are okay. Mediocre sized sheds, okay. Can't have a residence on there, but we can wipe it out for you, all right? Great.
What about the well or septic?
That's okay. That's a really good question. It can be what we would consider developed or undeveloped, right? Straight dirt, or it could actually have well and septic and electricity ran to it, and some of them like those better because those are improved sites, right? So you can use this for almost anything, right? Pretty awesome program, very rare, believe it or not, in the lending world. All right, Jenny, what's the question here?
Well, this is like, so retail versus wholesale. So like, has someone ever come to you and you're working with the buyer and they're like, well, I really want to buy a house, but I went to my bank, like where they have their checking account, and they told me I don't qualify. So if you go to your bank, that's considered retail. So I'm just gonna pick on Wells Fargo because I personally don't care for them. So they bank at Wells Fargo, they go to Wells Fargo, and then that loan officer says, nope, you don't qualify. This is usually what that person is told. And so Frank, what's the difference between the buyer doesn't qualify or the retail bank just doesn't offer them a product?
Very
to
simple.
qualify?
Retail banks are a box. That's it. That's all they can do, right? The biggest problem with retail banks is not that they're bad people, because it's where we put all of our money, right? The problem with the retail bank is they deflate the sales of your clients. Quick example is a lady named Patty. One of my first loans I closed like 25 years ago. She wanted to buy a condo in downtown St. Pete, went to her bank that she had banked with for probably her whole life. The banker told her, I'm sorry, Patty, to get a condo in St. Pete, you need 10% down. Patty literally called her agent crying and said, I can't buy. Her agent and I were friends. She called me and said, my God, Frank, I didn't know you needed 10% down to buy a condo in Florida. I'm like, what? What do you mean you need 10% down to buy a condo? Well, that's what the bank told her, you need 10% down. Here's the thing, the banker wasn't lying all the way. He was telling the bank's truth. The bank's truth is she can't buy it with them because they won't do better than 10% down. But the banker just happened to leave out the fact that they're not the only bank in the world, right? And they're not the only ones that have guidelines. We closed Patty 33 days later on the condo of her dreams, which by the way, she's still living there, I found out, with 3% down on a conventional loan. And I actually went to that bank and met with the bank manager. I did, and I for a little while I was getting turned down. The bank actually closed since then. It was a small local bank, but we showed them. I said, well, your banker should, and the manager was actually very upset. He goes, that's terrible. He goes, we're probably gonna lose deposit relationships over this, and that's really what they're about. They want their deposits. So he corrected his whole staff and had me go into a meeting and say, listen guys, just because we don't do it doesn't mean it's not here. You don't have to refer out, but you gotta tell them the truth. So you just gotta be careful. When your clients go somewhere and they come back to you and they say, I can't do this, the question is why, right? And you're not gonna bother me or Mari or Kim or any of our people just to give us a quick call and say, hey, is this true? What can we do here? But then again, this is the point of this seminar that I'm doing. I can't do all my products now, but I'm gonna give you the hard ones at least. So retail versus broker, I created this slide like 5 years ago. It's called the Nordstrom method. I think it's kind of funny. This shirt is from Nordstrom, right? I paid $115 for this stupid black dress shirt. I like it, it's a nice shirt, right? But it didn't cost $115 to make. Probably cost $3 to make. It was produced in Singapore, according to the tag. Somebody made this shirt for pennies, sold it to an export company, sold it to an import company, sold it to a tagging company. Eventually, Nordstrom picked up the shirt, put it on their shelves, sold it to my dumb ass for $115. Okay? That is wholesale to retail. Why do I explain it like that? Because in the banking world, it is exactly the same. Most people don't realize that wholesale brokers, like my company, that own the company, get the rates at the exact same level as Wells Fargo and Bank of America do every single morning. Their offices are in Charlotte. They have about 1,800 branches in the country. When they get their rates, what does the corporate office do? Mark them up a little bit, just a little, sends them out to the branches. That's their margin. What's the branch manager do? Marks them up a little because the branch manager wants to make an override. He wants a little extra commission for the money coming into the branch, right? Then you've got the originator, the guy like one of my staff, sitting there in their seat. What do when they get the file? Mark it up a little bit to make their commission, right? That's 3 markups guaranteed when you walk into a retail bank. Take out your phones real quick and somebody Google, or all of you Google, and we'll yell it out. Just Google 30 fixed mortgage rate today. Somebody tell me what it says. Because one of my next slides coming up here, we're gonna show you the wholesale side of interest rates. But I want you to see right now what your clients see. Go ahead and yell it out whenever.
6.11 to 6.14.
There you go. All right. Everybody should be seeing something over 6 on their phone, right? Absolute BS. Rates are not over 6% right now. The Google machine and all these little AI answers are pulling from the retail banks. They're pulling from the guys who have the most money to spend on the internet. I can't outspend Bank of America. I can't outspend Wells Fargo. In the mortgage space, just like in the real estate space, the big boys are always going to win the front pages and the front page ads and stuff. That's where the data is going to come from. Sadly, that's the data that your client has. So your client right now thinks if he goes to buy a house, he's going to be paying over 6% to buy the house. So then he goes in his little amortization calculator and he goes, man, this sucks. My last mortgage was at 4.5%. Man, this house is way too expensive. I'm just not going to move. The truth is, we're locking conventional loans right now on 30-year fixes in the high 5s to mid 5s. You want to pay points? You could be in the mid 5s. You want FHA or VA? Just wait for a second, I'll show you the rate sheet. Oh, there it is. This was put together about 5 days ago. I think they've actually come down a little since then. Conventional rates, 5.75. Go ahead and feel free to take pictures. We will also email this to you guys if you want a digital copy to post online, because the only way the consumers are going to know about this is if we tell them. We have to put it on social media. We have to tell them that this is possible. By the way, the best way to advertise on social media is not necessarily telling the rates. You can say, hey, rates are in the 5s, but what consumers purchase based on is the payment. Shar and I just did a Zoom this morning, consensus across everybody, people buy on payment. Rates sound good, rates get them excited, the payment sells the deal. So what I told Shar was, anybody who wants a flyer, you want to partner up with us, pick out one of your listings, or even one of your friends' listings. Let's get the picture of the listing, get the neighborhood, the address, whatever, so they know where it is, and then let's simply, let me give you the math and say, you can live here for only blank per month. That is huge. Just send us a message. We're gonna use that little AI machine, and we're gonna put it together. We're throw in your picture, throw in our picture, throw in the house picture, and boom, we have a flyer.
And then figure out which apartment complexes charge more than that, and then there you go, flyer those people.
Yeah, and speaking of apartments, we talked about this on the radio with Mari the other day. What does an apartment charge? First, last, and security. Dude, the average apartment's $2,500 or plus a month. That's $7,500.
If you have that, you have a down payment.
You have a down payment.
We're making a social media video right now.
Yeah, we really are. We're gonna turn that video into this. So I want to show you something else though, because this is really exciting. You probably already read ahead of me. 5 and an 8 on FHA and VA, guys, that's a 30-year fixed. We just locked 5.125. That is a hair off of 4.99. How many people are jumping into the market if all of a sudden they see 4s in front of their rates? Well, I've got news for you. I didn't create a slide for this, but we just opened up an FHA and VA program with a 5-year adjustable arm, kicks the crap out of the 3-1 and 2-1 and 1-1 buy downs, because if you guys know how the buy downs work, do you want me to explain or anything? Basically, you're just getting a temporary rate. Couple points lower for the first year, 1 point lower for the next year, then you're up to the market rate of 6 point something, right? In a 5-year arm, you're still a 30-year loan, still amortized on 30 with that nice 30 payment. But what's up, Jack? Welcome.
Thank you.
Thank you. You're still on a 30-year fixed, but you're fixed for, 30-year amortization, but you're fixed for 5 years. So what does that mean? We just locked, hear me on this, 4.5%. We could have locked 4.25 if the guy wanted to pay an extra point. 4.25 to 4.75%, 30-year amortization, fixed for 5 years, FHA and VA. The VA one we locked, $1.6 million. 100% financing, 4.5%.
Wow.
Way better than your stupid 2-1 and 3-1 buy down. You're getting it for 5 years, and the seller doesn't have to give you $15,000 to do it. Which, by the way, I'm going to talk a little bit of crap about the buy downs real quick. I think they're the stupidest gimmick that was ever created. Why? Because yes, we just talked about buyers buy on payment. So yeah, you can sucker your buyer into buying on the payment and give them a buy down, all right, which the seller gives all the closing costs for. But if your seller's going to give your buyer $15,000 for closing costs to get to this buy down, let me ask you this, Michael, if I was going to give you 15 grand when you walk out the door today, or I'm going to give you $200 a month for the next 2 years, which doesn't even make sense, but let's say 500, but whatever the math is. What are you going to take? You want the money monthly for 2 years, or do you want me to hand you the cash?
Hand me cash.
Exactly.
Yeah.
Who's not going to say no to the cash today?
Yeah.
Problem is the bankers are not presenting it
Especially
properly.
at that rate.
Yeah, well, with that number, it's really going to work out well, because I'm going to give you $2,400. But anyway, I should have done my math. But so it's time value of money. That's all a buy down is. They're just giving them the difference in their payment monthly for 1, 2, or 3 years. Tell your client if they really want the buy down and they don't want my 4.5% arm or my 4.25 arm, fine. Take the closing cost and you save 15 grand day one. Make sense? So these arms are real. The rates, by the way, if you didn't know, rates and cost are related. So the rate of 4.25, that's going to cost your client a couple points, right? But dude, he's almost at 3 point something percent. Okay? If that guy doesn't want to pay points, I could give him 5.25 and he will pay 0. And that's lower than any bank, any broker in this town will offer your client. Excuse me, a 0 point loan in the low 5s, fixed for 5 years on a 30-year amortization. Minimum credit score? Take a guess. Somebody. What do you think?
600.
Good guess. 570. 570. 100% financing. The veteran who we locked for $1.6 or $7 million had a 605 credit score. 100% financing, buying $1.5 million house, getting a 4.5% rate. If you don't think it can be done, you're wrong. But we got to tell our clients, you have to advertise this stuff. So later on today, when you get that listing and we do that flyer, let's use the 4.5 rate. That's for FHA and VA. Okay, conventional arms are not that good. And I'll tell you why, because Fannie Mae does not want everybody to refinance. It's why ARM rates really haven't gone down, because with the expectation is rates are coming down still. And if Fannie Mae sells a whole bunch of people 3 and 5 year fixes, guess how fast they're getting refinanced? As soon as rates go down. So that's why they've kept us on the fixes. FHA and VA are subsidized. Every time you do an FHA or VA loan, you pay a funding fee, you pay the little mortgage insurance stuff. That's how they get repaid. So they don't have to worry about it like conventional does. Any questions on that? Awesome. Bank statement loans. Guys, look at that. 6.25. That's the rate that Fannie Mae, that Michael pulled up, is advertising today, that the banks are advertising on a 30-year fixed conventional loan. I'm gonna give them a bank statement loan for that. Bank statement loan is the second best loan to conventional. Why? 10% down, okay, minimum down payment. Rates, obviously, almost conventional. They are what the retail market is advertising on conventional. Jumbo, anything over like $850,000, 6%. You can do a $2 million loan for 6%. Right now, jumbo. Call your bank and see what your bank's gonna give you on a jumbo loan. They're not gonna give you 6%. Go.
You have 20% for bank statement, so is it 10 or 20?
The minimum down payment, Jeff needs to change that. The minimum down payment is 10,
Okay.
right? He probably priced that one at 20. So his down payment and rate are 100% related to each other. By the way, the only way that lenders price rates, credit score and loan to value.
Why?
Why? Because of risk.
Risk.
It's all about risk. Every lender, no matter what they tell you, sells their loans on the secondary market. Some of them will sign a servicing agreement and say, we're gonna hold this loan. But you'll never see one that says they're holding it for 30 years. They'll say they'll hold it for a number of years. And it's not a bad thing if they sell your mortgage, but that's where the banks really make money. They make money on selling the mortgages. And they make money on the servicing. Everybody's like, well, they make money on interest. No, they don't. They don't make money on a 30-year mortgage because people keep their mortgages less than 5 years on average in this country. They're not making money on interest. They're making on those stupid fax fees and the payoff fees, the servicing fees. Believe it or not, the late fees, number one revenue source for a mortgage bank are late fees. Not people that pay after 30 days late, those are bad. The people who pay after the 15-day mark. That 15 to 30, and they charge you 5% of the payment, that's where they're making their money on you. So just don't pay it late. All right, and we'll send you this rate sheet if you want. Mortgage knowledge quiz. Get ready to give a prize here, Frank. We're gonna do another appearance on the Business Happy Hour radio show. Give somebody a chance if you've already won or already know it. What is the minimum credit score? Ah, shit! My hand clicked. Could you guys read that? What is the minimum credit score on an FHA or VA loan? Somebody. There is none, dang it. Shar, you're coming on the radio.
About damn time.
Yes, you can win that. The answer is, with my stupid fat finger, there is no minimum credit score on FHA or VA loans. Have you guys ever heard that? Has any bank ever told you that? No. Because again, the banks are greedy and the banks sell your loans and the banks want to make a lot of money. So it's risk. They don't want to sell these loans. I have about 70 investors that we sell our loans to or do our loans with, okay? Out of 70, one will follow the VA rule to the T. One will let me close a 487 100% financing veteran, which we have done. We have saved so many loans that way. Most of the loans we save are in the mid 500s. We have done one at 487. By the way, FHA has no minimum score either, but we can't find a bank in this country who will go under 500. Why? Because there's nobody on the secondary market willing to buy FHA mortgages under 500 credit score. Not because you can't do it. There's a more exciting guideline. What is the maximum, and I'm not gonna click the button, what is the maximum debt ratio on a VA loan? So debt ratio, is like the debt versus income. Conventional, I'll give you a clue, is 50%. What do you think it is for VA? You already know, don't you?
I'm keeping my mouth shut.
Does anybody take a guess? What do y'all think? Give me a number. Somebody had to say something to you before. All right, Michael, you can do it. There is none.
Yeah,
He knows it because he just came on the radio show. How'd you enjoy that, by the way?
it was awesome.
Was it good? Yeah.
Yeah, it was great.
First time on radio
That's
for
it.
Michael. We had a good time.
Yeah.
There is none. Why is that important to the real estate agents? Simple. Because if I don't have a maximum debt ratio and Navy Federal does, which they do, it's 55%, then if you go there and your client gets qualified and they really want that $500,000 house and Navy Fed said, sorry, they're only maxed at 450 because of their debt ratio, and I go run it through my system and get an approval, they're gonna get the $500,000 house. That literally happened with Cindy Hayden last year. It was a 320 approval versus a $415,000 closing 30 days later. And Navy Federal and USAA told them no. And we just simply ran it through the same VA system without a bad word called an overlay. We try to only work with companies that don't have overlays, which means they don't add guidelines on top of the actual loan guideline, right? The highest debt ratio we've ever closed in the history of Lincoln Lending Group, 73.4%. 73%. So if the bank said 50 and I can go to 73, quick math, your client just qualified for 23% more money. 23% more purchase price. I'm gonna leave you with this on the VA stuff because I think you're kind of catching on. Please, for the love of God, for the love of our veterans, do not accept conventional offers over VA offers. The conventional loan has a hard stop at 620. If your buyer goes out and does what all buyers do, stupid shit, okay, and they buy stuff during your transaction, they hurt two things: their credit score and their debt ratio. Well, if the VA doesn't have a minimum credit score and doesn't have a maximum debt ratio, and conventional has a max of 50 and a min of 620, then how good did you do for your seller when you said, no, let's take conventional? VAs are not harder. My wife's an appraiser. The appraisals are the same. You're not getting screwed. Now, yes, the appraiser stays with the house on VA and FHA. We understand that. But honestly, how many times has that bitten you? I've been in business for 26 years. It's bitten me maybe once that I can remember. We get that figured out if we have to. All right, any questions on that debt ratio?
So do you work with a first-time home buyer, like a down payment assistance program? all of that?
Absolutely. You're about to be very excited in 2 slides. We sure do. And of course, FHA 3.5% down, but I'm gonna tell you something very exciting that we can do on FHA. And of course, VA is 0 down. And I don't know if you knew this, VA has, at least with us, has no maximum loan amount. You can do a $3 million VA 100% purchase. The banks will tell you no because they don't want to hold those. It's too much money for one loan. That's why they say no.
Frank,
Yes.
I have a client that's a VA and he's looking to buy a land and build. Can we use?
Yes,
the
you can.
Construction for VA?
VA construction, absolutely. 100% financing for that fine veteran. You got it. Got our 250th anniversary coming up too. All right, Jenny, what's our next one? Let's see. Can a VA have more than one VA loan, a veteran? Absolutely they can. The answer, yeah, she won. Everyone's like, yes. Yes, they can. They can have, the most loans I've ever done for a single veteran is 8. His name is Tyler Sheff. If anybody knows him, he did the cash flow games here in town. Tyler and Jill, who are local realtors, not anymore, they live in Key West now. They decided to use their VA benefit and bought duplex, triplex, and quadplex, lived in a unit for a year, bought another one, lived in a unit for a year. I did every single one of his up until his 8th loan, and Tyler basically retired to the Keys on his 8 multifamily units. Still sells real estate down in the Keys, talk every once in a while, but he is a veteran that used it 8 times, all right? There are a few caveats to it, but it can be done. You can tell I love my VA loans. Overlays. So remember I said that was a bad word? Here's a little slide to tell you how bad it is. Basic VA guidelines, I already told you what they are. No minimum FICO, no max DTI. Here comes this big bad investor called the bank. He throws in, nope, we want 620, and your minimum FICO, and we want your FAB to 50% DTI. Here's the down payment assistance problem I think we have in this country. I think that the ones the banks offer are a bunch of BS, right? And I'll tell you why, and you'll probably agree. Because these DPAs, the down payment assistance programs, all the banks like to advertise them, oh, we'll give you all this money, we'll give you 100%, but then they smack a 640 minimum FICO and a 44% DTI on the best ones. Well, let's be honest. Are the guys who need the down payment assistance rocking a 640 and a 44% DTI? No, they're not, right? They're like low 600s, high 500s, still good borrowers. They have high debt ratios, right? Hence the lower credit, right? So, what's Lincoln Lending Group's solution? Affordability.
That's the problem.
Uh-oh.
So when it comes to affordability, the buyers can afford the property, but they don't have the down payment saved. So like, how many people have you dealt with that? They're paying $2,500, $3,000 in rent every single month. They can afford it. They're paying all the rent payments on time, but they think they're never going to get out of that hamster wheel of renting because while they're paying that, they don't have all this extra income. And how many buyers are like, oh, I don't have 20% saved? Right?
All of them.
Okay. Most of them, all of them. Well, because how many times has somebody told you like, well, my friend said, oh, my cousin's aunt is a realtor and she said, I heard it on the news.
Yes.
Right?
Facebook.
So I always
Must be
I say to
true.
people, I
It
go,
is.
the news is for all of the things, but don't you want a personal consultation? I don't know what the news says, but do you want to know what you can do? You personally. Let's do that.
And we don't want overlays. So to answer your question, I don't like the DPAs. We offer all of them because I promise to offer all programs, right? But I don't push your client into them. Why? Why would I when I can give your client 100% financing on a standard FHA loan through us, better terms than the DPA. We don't have the 640 minimum. The minimum credit score is 600. It fits right in line with where these buyers are. You don't have to be a first-time home buyer to get this. Every other freaking DPA in this country, take your pictures, requires you to be a first-time home buyer to get 100% financing. Not required with us. We'll give your buyer 3.5% towards down payment and closing costs. You can buy a single family or a duplex. So how many of you have had this investor? Hi, I'm an investor. I want you to sell me an investment property and I have no money, right? Because I saw the stupid Facebook ad, right? And you're like, yeah, that's not how it works until you came here today, because now you can sell that investor his duplex. He has to live in one of the units because it's a primary residence purchase for 11 months. Then you go find him in his next duplex. He moves his butt out of that one into this other one, and he has 3 doors under rent in 13 months. You just made an investor a real investor by giving him this program. This is a phenomenal product. Interest rates are on the 5s. Mari?
Let me add also
Oh, do
for
it.
you guys, I'm the queen of DPA. Call your loan, hola, sorry, and game plan, because this program is great, but we will get it down to where your client is bringing a Coke, a smile, and a pen to close it. Because you game plan with your lender and like.
Tell them about the most recent one you just did. How much money you got?
I'm closing that in 2 weeks. So he calls me and he's like, Mari, I literally have $2,000 in the bank. My spouse is disabled and we need to get out of this apartment. So they found a property. They want to bid for 170. But I went back to the agent. I said, wait a second. Even if I get them DPA, they still gonna have to come up with some money for closing. Go back, go up 175, and get that $5,000 credit. They're bringing another $400 to close it. They have to put the earnest money for $1,750, $400, and we can waive it. What I'm not telling them is that after they pay their appraisal, I'm giving them a check for $200 actually. I just worked that out yesterday. But I'm saving that surprise. I kept them a little scared. And I said, listen, you might need like $800 to $900 for closing. Can you make that happen? They're like, yeah, well, I can't wait to say, bring a Coke and a smile to the closing. I'll bring the pen. Have a nice day. So,
That's so awesome.
team, call your lender, game plan first before you bid. So you're not doing all of the work and then you're going back to redo the contract. But it'll be worth it. It's good. And then you just wow the hell out of your client.
And then we get referrals. And by the way, when she says call your lender, what she means is call Lincoln Lending, call Mari, call Kim.
Lincoln Lending, call me back.
All right, Jenny, we got more problems.
How about the mattress money?
Oh.
You don't want to know where this money came from, but it's not a bank. So what do we do with that? They have the money, but we've all heard of seasoning guidelines. Like it has to be seasoned. You have to trace where it came from. No one's gonna do a loan with money that they don't know where it came from.
Yep. So, mattress money. We love it, right? I'm going to tell you the old way and I'm going to tell you the new way. I'm going to tell you the old way. The old way to make mattress money into real money was, let me get rid of this. Hold on. I have a big finger. Hey, Johnny, I need you to sell that Rolex on eBay to your buddy Jack. Have him wire your money via PayPal, and then we're going to show it to the underwriter, and then we have a bill of sale, and I got seasoned money, right? That was cool, right? About 5 years ago, I constantly research guidelines, by the way. That's what I do for fun. And I found this little side note on FHA loans that said, unsourced money, ways to verify cash. And I'm like, well, that's interesting. I'll just sell the Rolex. No, it said bill of sale, blah, blah, blah. It said document donor or buyer's ability to save. And then it gave reasons or ways. A written ledger was the first one. So I said, well, hell, I got this loan in underwriting right now. This dad gave his daughter $10,000 cash, didn't tell us what buyers like to do. He just deposited cash into her bank, right? Didn't say, hey, how do I do this? He just put it in there. So we see the bank statement and it says counter deposit. Well, that means cash, right? So I looked up this guideline. I called the dad and I said, Dad, I just need you to follow me on what I'm saying, okay? He goes, yes, sir, Mr. Cotto. I said, so you gave your daughter $10,000. Yes, sir, I did. I go, where'd you get the money? He goes, well, I saved the money. He goes, when I get my paychecks, I put the money in the safe at the house. I said, that's awesome. I said, I bet you keep a record of when you save this. He goes, okay. I go, I'm willing to bet that you have a ledger that every time you put 500 or $1,000 in that safe, you wrote down on that ledger the date you did and the amount, right? He goes, yeah. And I said, you know what else I'm willing, sir? I'm willing to bet that over that year that it took you to save that, you probably didn't use the same pen, right? Because who uses the same pen for a year, right? He goes, you're right, Mr. Cotto. I go, great, will you send me that ledger? 2 days later, we had a ledger. 3 days later, I got a phone call from an FHA underwriter. I need to speak with Mr. Cotto. Said, yeah, is there anything wrong? She goes, no, I just wanted to talk to the guy who pulled the rabbit out of the hat I hadn't seen for 10 years. I go, what do you mean? She goes, you're the first broker to use that guideline that I have seen in 10 years. And I said, do we have an issue? She goes, nope, your loan's clear to close. I'm like, holy shit. I created mattress money into verifiable money. Now, I love doing fun stuff. I love magic. I love rabbits, right? But we don't have to do that anymore. Because at Lincoln Lending Group, I only now work with investors who do not verify gift funds. Government, FHA, VA, conventional. You no longer have to do it. So when your parents are going to give you a gift, you're going to have your mom or dad or whoever wire the money to the title company. We're going to have them give a copy of the wire receipt, and we will not ask for the parent's bank statement. The old rules, and a lot of lenders still rules, are that you have to show the donor's ability to give the gift. And that's how they catch the cash deposits. Because the kids have cash, they go give it to mom, she puts it in the bank, and then she wires it over, and then the underwriter asks for mom's bank statement, and they're like, nope, caught you, right? Now, if mom already has the money, great. Then you have to worry about it. But in my world, I don't want the bank statement. Just the wire transfer receipt with mom's name on it, going to the title company escrow account is the verification that they had the ability to give the gift. Your money just became verified on all Lincoln Lending transactions. And if an underwriter for some reason in a program we use doesn't let us do it, we'll go sell that Rolex. All right?
Is that a maximum for the gift?
Generally, no. Some programs will have a requirement that the buyer has to have 3 or 5% of their own funds, but there is never a maximum on the gift. As a matter of fact, the programs that require that say that if a donor gives more than 20% gift, there is no money required by the donor. And I'll take it one step further. Family transactions. Easiest transactions in the world, but do not do a family-to-family sale with a gift of equity without talking to your bank or your broker. Because we will set the numbers up for you. When somebody calls me, if Jack calls me and goes, hey, this guy needs to sell to his son the house and he wants to give his son all the equity, right? The question I'm gonna ask the dad is, what do you need to net? How much? And then I'm gonna work with Jack and we're gonna get a seller net sheet and find out what his closing costs are. I'm gonna find out what the buyer's closing costs are. I'm gonna find out all the tax prorations in between, and I'm gonna do the math, and I'm gonna say, Jack, the purchase price is gonna be this, the seller concessions are gonna be this, and the gift is gonna be this. Write the contract. Don't write the contracts until you talk to the bank or broker. Let us structure the numbers for you and structure the purchase price. Another reason you do that is because you don't wanna sell your son a house for $200,000 more than you have to, even if it's on paper, because what does that create? More taxes for the son. A big and a taxable event for the parents potentially, even if they gift. It's much better to keep the purchase price as low as you possibly can and accomplish the goal with the gift. Any questions with that?
So you don't deposit the cash into the daughter's bank account, you just give the cash to the
Title company, yeah. And I recommend that, guys, by the way, on all transactions with gifts, not just with me, not just with this scenario. Why? Because you're taking an underwriting step out. If you give it to the kids, you got to show it clear the kid's account. It's another bank statement. It's another condition. If you go to the title company, I just call up Stuart and say, send me an escrow letter. Show me proof that you got the money. Done. Then I don't have to deal with the bank statements with clients. Any questions? Yes.
When I bought my first house, gosh, back in '97, long time ago, but my parents and my ex-husband's parents both gave us $10,000 to help. But we had to get a note from them saying we didn't have to pay it back, that it was actually a gift.
Yeah.
Is that
Wow.
still
So
a current
notes
requirement?
were required in the early 2000s, all the way up until about 2005. What they require now is simply a gift letter. It's not any type of recorded note. It's a mortgage. They got away from that because that became subordinate financing and it complicated things and it made the loans less sellable. It was happening when I first got in the business in 2000 is how I know about it. And it ended pretty quickly. But now it's just a letter. It's a gift letter. By the way, side note, little tip for you guys, gift letters. Most programs require them to be related. Don't send a gift letter into your bank saying friend, all right? And sometimes they want proof of relationship, sometimes they don't. You know what my favorite one is? In-laws. Brother-in-laws, in-laws, mother-in-laws. Why? Because they don't share the same last name. Right? If the underwriter really wants to be a pain in your butt, maybe they ask for some sort of documentation. I'm willing to bet you can get something. Right? Sometimes you can stretch out to extended family. There's actually laws, guidelines that say it can be a very close friend, but you have to document a relationship. So you have to show you've been on a lease with them, or they were your college roommate, or something that you have a long-standing relationship. So there's always a way around it. Great question, by the way. That was an old guideline right there. All right, what's the next one? Click, click. Oh, there we go. Oh, this is my
Okay.
favorite.
Who has that buyer that's ready to go, but also they still own a house? Or they own a house in another state. So they're like, I want to buy this house, but they don't want to carry 2 mortgage payments. And so in certain markets, sellers don't want to take contingent offers. Like, I've been approached by a buyer. She's like, well, I need to sell my house in order to buy this house. So she was using the equity to buy the next house. I'm like, so do you have that house listed? No. Do you know how much equity you have in that house? No. Were you gonna do that part yet? No, I just want to make a contract on this one. I'm like, no, like, that's not how that works. But this woman did not want to hear the reasoning behind that. But if she would have gone to Frank, maybe it would have all worked out for her, because what's your solution to this one, Frank?
So if you're a listing agent, listen up very careful, because I'm gonna show you how to win every single listing that you have, every listing appointment, and I will sell this for you, all right? So that exact scenario usually has 3 problems. Problem number 1, they need the money, all right? Problem number 2, let's say they have the money. Problem number 2, they can't qualify with 2 mortgage payments against them, right? Or just they don't want to. So I'm a private money lender. You'll learn at the end of the presentation, and I used to write private money bridge loans for this all day long. All right, Michael will bring me a deal. He would say, hey, this guy needs $20,000. I got his house listed. No problem, Michael. I trust you. You're gonna get it sold. I'll give the guy 25 grand. Put it in second position. Go sell his house. I get paid back. Use the money to buy your other house. Well, if he does that, we just created another debt. So now they're qualifying with old house, bridge loan, and new house. I don't want 3 mortgage payments. I know none of you guys or your clients do, right? So let's solve all 3 problems with one of our 2 buy before you sell products, all right? Here's how this works, all right? And I'm gonna show you what top is the most exciting thing, and this is where you're gonna use in your listing presentation. We, our partner, will pay off your seller's home in full and give them 75% of their available equity on an interest-free, payment-free bridge loan, right? Does your Jack Spacey's like, how the hell? So here's how it works, okay? And they make money on this. I'll show you how, okay? We're gonna do a little example. Look at this. It's the house that everyone sees. What did you say, Jenny? That's the most?
It's the #1 stock photo of a house.
The #1 stock photo. Yes, and I chose it. I wonder why. All right, so here's your current sale price of the house that they're living in that you're gonna sell, $400,000, right? I told you we'd give them 75%. So let's assume that your client has a mortgage debt for 100 grand on that house. Well, 75% of 400 is 300,000. They owe 100. So they've got 200,000 available equity. All right? We will go in, our partner, and they will literally pay off that 100 grand. They will literally wire them 200 grand minus some fees. I'll show you that in a second. They can do anything they want with that money. The seller can use them for the down payment. They can use them for closing costs. They can use them to pay off debt to qualify. They can use them to renovate the home you're trying to sell. How many times you guys have this damn house and you're like, if you guys would just put some money into the yard, or just paint the house, or clean up your pool, I'd get you top dollar. I don't have it, but they're sitting on equity. Now you've got the money. They can even use the money, keep some of the money, and put it into the new dream house they're buying. It's their money, tax-free, all right? Wait to take your picture, I'm gonna show you the whole slide. Seller has 6 months to sell the previous home. Right? Sounds like a bad thing. No, it's not a bad thing. Shar and I talked it on about the pitch this morning. One of the worst calls that a real estate agent has to make is the house is not getting showings. You listen to your seller and what they wanted to list it for. They didn't listen to you, the licensed professional, and you got to be like, dude, listen, it's not getting showings because you're overpriced. You got to lower it. Another month later, you got to lower it. You got to lower it. That's a crappy conversation to have with your seller. Well, if they do this program, they have no more stress on their mortgage payment, they have money in the bank, and they've signed a contract to sell their house to my investor partners for 75% of the listing price in 6 months. Guess how easy that conversation becomes. Hey, by the way, you have to sell this house in 6 months at that price. If you don't drop it, time to do it. Yes, ma'am. Time to do it. Yes, ma'am. They're gonna do it. I've never seen a house bought in this program because we're not in the business to do that, neither is my partners to do that. We don't want the houses. That's the last thing we want. Now, if it actually happens, there's a couple of programs we can actually give them the equity back. There's ways that save the equity, so it's not a total loss. But again, it's never happened. So if they happen to get to that point, the seller will get back the difference of the sales price minus the mortgage repayment, closing costs, equity access, and a 2.25% fee. So here's how the math works. House sells for $400,000. We've already given them the $100,000 because we paid it off for the existing mortgage. We gave them $200,000, but out of that we took the 2.25% fee based on the listing price, and there's some closing costs in there because it's an actual recorded mortgage, so you have to pay recording fees and things like that. There's no points or anything necessarily. So your seller actually nets $89,150 still on the sale of that house. Make sense? Now, of course, they have minus agent commissions, so if you guys are obviously gonna get paid something, right? I didn't put the number in there to be exact, but any questions on this? It is the sickest buy before you sell I've ever seen. I've never seen in 26 years one, well, they will pay off the home. Next listing appointment you go to, just tell me you're going into the appointment, give me a little bit of notice, I'll be available, you bring it up. When they wonder how the hell this can be done and how it's legal, you put legal on the phone, and I get on there and I explain to them, this is how it works, yes, we will pay it off, yes, I'll do it in writing. Question the agents always come up with is, well, how do we know what we listed for? How do we know what the bank is gonna lend off of? I'm gonna have that answer for you while I'm on the phone with that listing appointment. Because you're gonna give me the address ahead of time. You're gonna try to tell me what you think they owe on it. And I'm gonna hop on a little computer system, punch in some things, in about 4 minutes, I'm gonna know what we think it's potentially worth, or I'm gonna go with what you think at first, tell you if it's okay or not. And then I'm gonna tell you how much money we're gonna give them, how much cash they can get, and tell you that it qualifies. Not all homes are qualified. We can't do New York and Maine right now. Other than that, we can do the whole nation. One of the programs won't do within 2 miles of the coast. The other program will. So we've got options. If I run it through one, it doesn't work, I run it through the other one. But this is not a mystery. And then once you get your listing, we can approve them on this and only use it if needed. There's no cost to get it done. So you get their house listed, I get them pre-approved for the conventional or VA mortgage, cannot do FHA on it. We go about our day. If you get great activity on the listing and you think you're gonna get it in contract in time to do a double closing, awesome. We close them on the double closing. If it gets within about 15 days of when they need to buy that house, time to start. I gotta go ahead and put this in underwriting. Takes me about 7 days. Gets it done, get them the money in 10 days, and they still close on both their properties. Anybody? Make sense? You get one mortgage payment. That's it, the one you bought, and nothing for 6 months. The company's not making a ton of money on these, I promise. I make nothing on these. This is a partnership that we have to allow me to bring this to you guys to sell more conventional and VA loans.
I have a question.
Please.
What happens if they don't have like a ton of equity?
So they will give them 75%, right? Technically, one of them can go to 80, right? But they're gonna have to have at least 30% equity to get into one. Come on.
I made it. Sorry I'm late. How are you?
You're doing great. This is Vanna. So they have to have equity. That's the key, right? Now, if they are tight, or maybe this program doesn't work, I can still lend the money to them privately. But remember, if I lend the money to them privately, we're still counting the old payment against them, the private money loan, and they're gonna have a new mortgage payment. And it did work for many, many years, and it still works. It just depends. And to answer your question, well, what's your minimum loan for private money? I don't have a minimum loan for private money. I did a loan for $15,000 for a real estate agent last year, right? Just understand that there's fixed costs. When you come to mortgages, you're still going through title, you still have intangibles, self-recording, still have fixed fees. So that $15,000 loan cost her like $19,000, right? Just because of fixed cost. I could have given her the same amount for same closing costs on 50 grand that I did on 15 grand. I just approved a $25,000 one yesterday, so we can do it. Frequently asked questions, do I lose my commission if the seller uses the program? Absolutely not. Even if the partner company buys the home, they relist it with you. And you are still the agent. You will never lose your commission on this product. What happens if it doesn't sell in 6 months? We already went over that. I've never seen it happen, and it will absolutely motivate your seller to listen to you on the proper listing price. Any more questions on that? Boom, income. Shouldn't have sat down.
I thought it was done. I thought the rest were yours.
I think you got like one or two more.
Okay. How do we feel about when you ask them, okay, do you have a job? Do you work? Do you have income? And they say, yeah. And then you say, great, so do you have a W-2? And they're like, no, I have a 1099. I'm an independent contractor. I'm an independent contractor. I own my own business. So how many times have you had that where they have money, but it's just not that nice tied up ribbon on it like a W-2? And a lot of times they've been turned down. This person doesn't qualify. So Frank, is there a solution for that?
So the people who are 1099, in general, the old rule is, the rule before you walked in this room, is you gotta be on 1099 2 years. It's treated as self-employed, gotta take an average of your 1099, and we have to get your tax returns because we have to see what do you write off on that 1099 because you have the ability to do it, and then we use your adjusted gross net income based on certain factors. The new rule is twofold. Everyone in this room now qualifies with a 1 year 1099. Show me 1 year on a 1099 job in any profession, and you're getting a loan with as little as 10% down, no PMI. But there's a major caveat to this that we just released a week ago, and that is the W-2 to 1099 program. I guarantee every active agent in this room has had that client that was a W-2 employee making great money, and the company flipped them over to 1099 for whatever reason, and they're done. See? They didn't qualify. Today they do. Not all professions, but basically, I'll give you some examples. Plumbers, electricians, nurses, truck drivers, people who are service-related people who are employees, this is the key word, employees of that company, but they are paid 1099. This is not for self-employed individuals. This is not, unfortunately, for real estate agents or mortgage professionals, right? We're not even professionals, right? That's a joke on another slide. But anybody who is flipped, how long do they need to be 1099 with me? 1 day. 1 freaking day, 1099. I know Jack's laughing, he's like, this is impossible. But so, we do have to verify their employment. We do have to get something from their employer showing that they are getting paid, right? So I'm gonna get basically like a VOE from the employer, and the employer has to say that they don't have any additional expenses that they're responsible for. But all of the, that's hilarious. I was like, was that me?
He said, no more additional, hi, my friend.
See, that was really exciting. See, everybody, even the person on the phone learned. So literally they can have just switched. That's who it's for. It's somebody who just got into 1099, who's a great buyer. They've got the income, they've got the down payment, 10% down. Now the rates on this, depending on credit and down payment, if you go the minimum down payment at 10%, your rate's gonna be about $799, all right? It's a Band-Aid. It's not a loan that I'm gonna tell them to keep for the rest of their life. It's called Get In It. You can buy this house at today's prices, which is what the important part is, because prices are going up. And then we refinance them in a year or 2 years, depending on their tax situation. But at that point, we're gonna tell them what to file on their taxes, don't take too many write-offs, yada, yada, and we'll get them into that conventional loan. Any questions? It is just as it sounds.
What if you're a 1099, but you also have an S corp and you give yourself W-2s? You just treat it as a
So
W-2?
one of the programs let us, okay, 2 questions there. So one of, not the program I just got done saying that you can do 1 day, because that's a self-employed individual. That person will have to have the 1099 for 1 year, and we'll treat it as self-employed. And we'll look at his, we won't necessarily need the tax returns, but we'll do a 10% reduction in his 1099 income. So if he makes $200,000 a year on his 1099, we're gonna give him credit for $180,000 of income without looking at his tax returns. The way you describe that as well, though, is the person is self-employed and they pay themselves, they receive 1099s, but they pay themselves W-2. And this is actually a very common question. A lot of self-employed people will come to us and I don't know if they're trying to lie or not, but they'll say, oh, well, here's my W-2. I pay myself $120,000 a year. And then we do the research and we're like, well, wait a minute, this is your company. And they're like, yeah, but it's a W-2. No, you don't get to use your W-2 like that.
See,
Right?
that's what I have a feeling.
Okay.
I was like,
Everybody
yes.
thinks, and I think a lot of CPAs get bad advice because they're like, oh yeah, put yourself on W-2. Doesn't matter.
Or people are like me and they don't even know what the CPA is talking about anyway. It's a different language. And I'm like, okay, whatever.
Believe it or not, I do that a lot. But so the answer to that question is if you are self-employed individual, it's 2 years tax returns in most cases, unless there are some caveats. We can do 1 year self-employed on government and conventional loans, believe it or not, with 1 year tax return, but you have to be coming from the same line of work. The most recent one we did was a guy who's a plumber for 10 years and he opened a plumbing company. Simple. We let him do 1 year of tax returns because he's an existing plumber, had experience, and I used his tax return and qualified him on a conventional loan with 5% down. It can be done. Again, bank told him no. Because the banker, when he walked in, just goes, oh yeah, you're not 2 years self-employed, sorry. Well, that's not true. Fannie Mae allows 1 year. All right. I think this might be your last slide.
Yeah.
For you.
For me. So you got your DR, now you're ready for your new zip. So obviously, like if you've gone to medical school, you graduate, now you're a doctor, you're about to make a bunch of money, and now this person wants to start living that doctor's lifestyle, but they just graduated. So like what do most brand new doctors have? Debt. Tons of student loan debt. Okay, so what's out there for those people?
Doctor and professional loans. So, exciting thing about this, all the what is it, SunTrust, now Truist, they like selling their doctor loan. They're pretty good at it. I'll give them some credit. Now you can do it on the wholesale side. You don't need a retail bank to do it anymore. And we've taken it to the next level. We will give to a doctor and a nurse and even a chiropractor, we will give them up to $2 million, 100% financing with no PMI. Conventional mortgage rates, you can close those in 15 days all day long. Fannie Mae guides, 45% DTI. We have another product. The reason I put doctors and professionals is my other doctor loan will give you up to $1 million, no PMI, and you don't have to be a doc. You can be a CPA, an attorney, somebody who holds like a 4-year degree professional license, okay, professional educated license type thing. Guess who's not professional? Me or any of you, right? Sorry, I tried. They don't think we're very professional. I don't know, we have licenses, maybe because we didn't have to go to school, I don't know. 1 week of school doesn't count, clearly. But we can do these, we have a whole list. So I mean, I didn't want to bore you with the whole thing, just ask me. But if they are a professional, they get 100% financing, no PMI, and the rates are amazing. The rates are in the 6s on these programs, competitive with the banks. And if they are jumbo, which a lot of these guys are, we will beat all those jumbo rates and get you the nice low 6s on the jumbo rates. So doctors, great buying. Make sure you tell them they get 100% financing. All right, this is one of my favorite things to show you guys. So a lot of guys come up here and they say, hey, send me your business. I'm a cool guy, blah, blah, blah. Text me, email me, whatever. What I want you to do, because the number one thing when you tell a client that you want them to talk to your originator is, I've already been pre-approved somewhere else, right? I don't want to start over. Well, I say the same thing, right? When I go shopping for financing. So here's what you do, and it's on the top of my niche flyer, it's right here. I don't need an app, all right? Mari, Kim, me, anybody who works for my company, if you send us a written estimate from the other bank or broker and simply tell us the credit score that the other bank or broker got, my staff is trained to use that information, assume they're approved, go in, get them a written estimate, apples to apples, beat the rate, beat the cost. Here you go, what do you think? Oh my God, that's amazing. You just saved us a quarter point and $4,000. You like it? Yeah, now do the application. All right? No confrontation, no BS, no saying no. If they don't want to take 30 seconds to forward us a picture of their estimate and tell us their credit score, then they just don't want to save money. That's okay. And by the way, I say this real quick. I have what's called a VA guarantee. My father passed away a few years ago. He was a Silver Star, Purple Heart Marine. It's on your sheet in writing. You can show it to your clients. I am committing right now to beat any written estimate for any veteran on any loan 250 and up. End of story. I will close the damn loan for free if they have that good of an estimate. Rarely ever happens. But you already have it in writing right in front of you. So if you don't give us a shot on the VA ones, I can't help. But just text those to me or to one of my staff, and they're all trained to do it, and they know that they're authorized to do that. Here's a couple of the other exciting programs. We have something called the Fast 50 loan. All right? Sounds crazy. Let me tell you what it is. Anybody with 50% down buying an investment property is qualified. I don't care about your credit. I don't care about your bank statements. I don't care about your bankruptcies, your foreclosures, your short sales. I don't care anything. If you have 50% down and it's not private money, I won't even do that half the time, private money. It's a bank loan. It's a fully amortized loan. Okay? Rates are gonna be in the 9s. Put 50% down and you're done. Title issues, we fix them, put them on the 50. What I do a lot of times, if there's really crazy stuff, I close it privately for like a month, do what we gotta do title-wise, move in ownership, like take it out of the mom's name, put it in the kid's name. Now it's the kid's investment property, woohoo! Close it on this loan. We will underwrite the loan before I close privately to make sure that it's gonna work. Fix and flips, same investor offers these, that's your non-QM. That's if somebody wants to, go renovate a house and flip it, we can do that, and outside of private money. Bank statements we already talked about, 10% down. Don't need W-2s, tax returns, or pay stubs. We just average your deposits, very simple. 1099, we already talked about that. P&L only, interesting product. We don't use it a lot, but you can actually create your income. Get your CPA to give us a P&L, non-audited, and that's your income. And I don't even need a bank statement with some of the products to back it up. Put 5% more down, we don't even need the bank statements. Right, so that's a really cool product. No income doc, primary residence purchase or refi. Do not let brokers trick your clients into committing occupancy fraud. All the brokers in town who think they're slick, who think that they're a person who can't qualify for the primary residence, and I'm just gonna put them on a DSCR loan without income verification and lie to the underwriter and tell them it's an investment, are gonna get caught. Right, it's happening all the time right now. It's called reverse occupancy fraud. It is illegal. You will lose your license, they will lose their license. Don't ever put that in writing, no matter what. If a broker tries to do it, say that is not right. You have a program. 25% down, no income verification on any primary residence loan. All you need is a 660 credit score. It's a great loan. Yeah, the rate's a little high, but it's a Band-Aid. I'm gonna tell them what to do to file their income, and we're gonna refi them out of that in a year. No income employment investor loans to close in an LLC, that's DSCR. Right? Everybody know what DSCR is? Debt service coverage ratio. So everybody and their mothers is coming out with DSCR. I'm gonna tell you what Lincoln Lending does different. They normally say you have to have the house payment covered by the rent by at least $1. Not with us. I don't care. You put 5% more down on a DSCR loan with me, I don't care what the rent is. I won't even ask for a 1007. I might do an internal air DNA. If you wanna do short-term rental, I'll let you choose. Short-term 1007 rent survey, air DNA, or long-term 1007. We'll order all three. And most of my investors will pay for them for your clients. So you don't have to buy them. If they have leases on the property, you want to use them, great. If the leases suck, I don't want to see them. Let's move on to something else. And if it's DSCR and I have no ratio, I don't need them anyway. Right? So we just take the DSCR to the next level. Asset only. I say not just for celebrities, because one of the most popular ones we've ever closed is I closed a loan for Hulk Hogan's first wife, Linda, with him since the beginning. Kind of a funny story, when Linda interviewed me to see if she'd work with me, she had one question for me. Do you know my husband personally? Because they were going through the divorce at the time. And I said, no ma'am, I've watched him since I was 5 years old. She goes, you're hired. I was like, sweet. So Linda, you can imagine Linda could be a little bit arrogant. She's Hulk Hogan's wife, right? I mean, you've lived with Hulk all day long, you gotta rub off on you a little bit. And so Linda, she meets me in my office and she goes, all right, Frank. I go, Linda, what do you do for work? She goes, work? I'm Linda Hogan. And I'm like, oh, but like, how do you make your money? She goes, Frank, I've been the wife of Hulk Hogan for 30-something years. She goes, I do not work, I support Hulk Hogan. And I'm like, okay. I'm like, so what are we gonna use to qualify you? And she goes, and I only get conventional financing. I'm like, you do, right? So, well, I have a woman sitting in front of me, no matter what her name is, saying that she only gets conventional loans and she doesn't have a job, right? How the hell are you gonna do that? Simple, she had assets. And remember, I spend my time reading guidelines for fun, right? Well, Fannie Mae has a guideline that says, they have a lot of cool guidelines, but this one says, if you're of retirement age, over 60 years old, you can use your assets to qualify. And it's really way simpler than you think. All you have to do is figure out how much the person needs to qualify. Let's say Linda needed $10,000 a month to buy this $1 million house down in Sarasota that we got, right? It's not the real number. But anyway, I said, Linda, let's say you need $10,000. I need 36 months of $10,000 in one of your retirement accounts for you to qualify. That's only $360,000. She had way more money than that. All we did was call her Fidelity advisor in California, who hates me now because he does mortgages. And he realized he could have done this loan after I took her from him, right? Because he didn't read the guidelines. He gave me a letter saying that lender got $10,000 a month coming to her. She got one deposit put in her bank account. I sent the letter and I sent the deposit from the bank account to the underwriter. Linda now had $10,000 of qualified income on a Fannie Mae loan and closed her in 22 days. Linda Hogan closed on a conventional loan with no job. I have closed tons of these. If you're not retirement age, Fannie has other rules, so does Freddie. You can take your assets, you can divide it by 60 months, you can divide it by 240 months, you can do other things. I can take your W-2 income, calculate out your assets, put them together, and create more income. I even have a loan, a non-QM loan, that we closed for a young guy who bought a $2 million house in Avila a few years ago. His family inherited, sold a marijuana farm to a Canadian marijuana company. They gave the family $26 million of Canadian marijuana stock. The son got $6 million of Canadian marijuana stock, not US stock, Canadian marijuana stock. I used 2 months of the Canadian marijuana stock account and closed him on an asset-only loan. The kid didn't even have a job. Got a 6.5% interest rate on a 30-year loan with 20% down. Absolutely amazing. Everybody else in the mother said, you can't do that. It's Canadian stock. I don't care, it's stock.
So, first of all, about 10 years ago, I bought a bunch of Canadian marijuana stock and it's worth pennies.
Yeah. That's called a tax write-off.
You're right.
I did the same thing. Actually, we bought a bunch of CBD stock and it went from.
Yeah, exactly. But no, my question is, so my daughter's worked for 2 years. She's about to go to grad school.
Mm-hmm.
She has a 529 account, and her grandmother has a trust for her college.
Mm-hmm.
Can those two things be used as income for her to qualify?
Yes, the guidelines on trust are very complicated, but the trust can actually be manipulated to create income for her. If grandma's willing to do it, we can have the trust start sending her money, and all you have to do is change a couple lines and say that she's getting distributions, and I can actually create income using the trust itself, not even the asset within the trust. It's very interesting.
What about the 529 plan?
The 529 plan I do.
She will be taking money out of it every month.
Is there
to pay for, while she's in college to pay for housing.
Is it significant? Then we can probably do what's called asset depletion on it, because she's younger, so they're not gonna give her like they did for Linda, but they will give her a portion of that money and divide it out by a certain amount of months. But I think your trust will be your easier game on that one. That's gonna be a fun conversation. Yes.
I really wanted to get a house.
That is the kind that we work on and get fully approved before you put under contract.
Yes.
Yes. And then speaking of these little funny green maple leaves that people smoke, marijuana income lending. Gotcha. Listen, I did this when I started this like 10 years ago, and it was kind of faux pas. Now I can flick a quarter and hit a dispensary. So I was like, I better find a way to lend to these guys. Anybody working, now banks won't normally do this, but anybody working in a dispensary, most banks are gonna say no to, because they work for a company that technically is still federally illegal. All right, even though all the states, I think there's like 43 states now that have it on the books. We're dumbasses for not collecting tax revenue, in my opinion. But now we can do loans through one investor for people who own the companies. I can do conventional loans for the guys who work there all day long. We close them every day. But now I can do them for the guys who own the companies. So if you got somebody who's got a big marijuana company, or they have ownership in Cresco or Trulieve or Move or something like that, bring them over. We'll get them a loan. It's gonna be a non-QM loan, and it'll be a Band-Aid, and then I'm gonna help them figure out how to move the money out of that to do something else so that they can close on a conventional loan. Well, that's weird, I put it in there twice. Moving on to that
You
one.
really wanted us to know.
Doctors, you gotta lend to doctors.
For DSCR loans, so you cannot close in the person's name?
Yes, you can. That's a great question. A DSCR loan can be closed in an individual's name or in an LLC name, and the LLC does not have to be existing. It does not have to be making money. You can literally open up an LLC called 123 Main Street LLC just for that property and have a new one for every single property. What you can't do is close it in a trust. It's very interesting.
No, you have to put the trust after the fact.
After, right. The DSCR lenders, for some reason, have an issue against trust. kind of like Fannie Mae has an issue against LLC. But I'm telling you a little secret. Fannie won't let you close in an LLC, but with our investors, you can put it into an LLC after closing and they won't call your note due. Be very careful with banks. Most banks have a clause called the due on sale clause, which says if you change title, even if it's your own LLC, you have just changed title to the property and they have lien to a different person and they will call your note due. We check with our investors to see who will allow it and who won't. And we have a short list of people who will allow that, right? You can close in a trust all day long, anytime, right? And then you can have the trust owned by an LLC or vice versa. I own every property that I have in a trust. I own them in a land trust. Even if I close personally, I can drop it into a land trust. All right, any
You
questions?
also need to update your owner's title policy.
I sure do. I talked to Matt yesterday too.
Yes, you are right.
One of my properties is not in a trust, which I gotta figure that out. And somehow my mom's on a property too, which is not hers. So anyway, well, that bad title companies. Anyway.
Rich people problems.
I know. I don't know. First world. We say first world now. Politically correct.
No, but what you bring up is interesting though, because the only relationship where one person automatically inherits the remaining is spouses. So even familial relationships like mother and son, father and daughter, siblings, it is not implied. If there are two people on title and one passes away, then there's a chance it's gonna have to go to probate, especially like, let's say brother and sister buy something together.
Even
one
with full rights of
passes-
survivorship?
Huh?
Even if it's a deed, joint tenants with full rights of survivorship?
Okay, is that what it says?
Does it?
Well,
That's right.
so there are ways to take title. So it's are you tenants by the entireties? Are you joint tenants with rights of survivorship, which means if someone passes away, it's this. Is it a life estate? So it means like it's my house, but if I pass away, then these are the people I want it to go to. That's a life estate, or if you've heard a ladybird deed. So there's 100%, there are ways to take title. And so if you're working with those buyers, like have that conversation, because the title company can prepare the deed as it needs to be at that closing, especially if you're working with seniors. You know, Frank has reverse mortgages. If they're buying and they're already at that retirement age and this is their retirement property, let's talk about how are we taking title. Because the worst thing that we see with title is that people don't understand that. And a big misconception is, let's say a man and a woman are married, they're spouses, but they got married later in life and each one of them has adult children from other relationships, and now they bought something together, the spouses, and one passes away. There's some adult children over here on the sidelines thinking that they have something to say about it, and they do not. They do not.
Right.
So, you know, these are just the conversations that you can sort of introduce. Again, like, I'm not an attorney. I don't think anyone else in the room is an attorney, so we're not giving legal advice. If it's about, well, which is more appropriate for my taxes or whatever, that's a question for your CPA. But we can ensure title, we can prepare the deed however it needs to be. Or if you need to close in a certain kind of way and then update it properly without negating your loan, we can also do that. But, you know,
Without
ideally,
causing an event like doc stamps on the deed because you've changed title afterwards. Much better to do it now than after.
yeah, I mean, even if you are just doing like from this to this. So also things like, oh, I bought this house before I was married, then I got married, then I changed my name, so now do I have to go and change it? Not necessarily. Like in those situations, we can use a marriage certificate and there's documentation like, I was Jenny Spooner, now I'm Jenny Restrepo, I'm still the same person. But I just had a question from a realtor that said, he got married and moved into his wife's existing home. So she already owned it, and then they got married, but they're older. He's like, so should I have the deed updated to officially like put my name on the house? And Matt said yes, because even though it's their marital residence and they're a married couple, one less question, one less problem that he's on there. And I would say especially if she has adult children that are not his biological children and it's their marital home, then yes.
I agree with that 100%. And that's a really, that happened in my family, by the way. And I was the guy saying, hey, that's my property. And it wasn't.
And,
So,
well, I find out so often too that
I think even the people that go through it, we just went through it, it was very complicated, because we're 5 different children, and, but I think that I've had so often that I take a listing that was left to the kids, and I don't even think the parents understood that was happening, and they would say, oh no, we're in a trust, or we're in this or that, and part of it was true, but it had to go through probate anyways, and it's better to know that before we go under contract, because that's not a good,
100%. I mean, my sister just bought a house in Illinois, and so here I am in Florida, where we have lots of fraud in Florida, and they clearly do things differently up there. Not, I would necessarily say for the better. They wait till the closing table. I'm like, I'm sorry. The woman who's selling, first of all, you did not do the contract correctly, because there are 2 people's names on this title. One of them is deceased. So do you have the death certificate? Also, this lady is like 97. Is she alive? All I see is a digital signature on a piece of paper. So is there proof of life of this woman that she is actually alive? Because her son was doing most of the talking. As it turns out, she was alive. But like, y'all, I must have...
Small accusation.
No, I
Just a tiny.
This is your one takeaway, trust no one. I don't know you, and trust is earned. So...
Show me your grandmother.
But for real, is this woman alive? Because if she's not, we have problems.
I mean, people have done it.
Capable.
20 years in the business.
But
I've seen
also,
people
I
do it.
have had real
So,
estate
it's
agents tell me,
They
oh,
have
we
to.
don't worry about that. That is title's responsibility. So if you didn't execute this contract properly and you didn't put the right, I don't have a level of faith that you did your listing agreement properly, that you collected the things that you needed to have on this person. And so, you know, I've had real estate agents tell me like, oh, well, yeah, the son is going to inherit the house, so can't he just list it with me? No.
No, that's not how it works.
Surely no.
guys.
Yeah.
There's a system.
Correct. So when it comes to stuff like that, especially, you know, if you're going on listing appointments, like, I trust nothing. So we're not sitting at the closing table finding out that someone is deceased. If 2 people's names are on title, 2 signatures need to go on your listing agreement or else. And, you know, if you're on the buy side, this is the weirdest thing about the Tampa Bay area, and I guess primarily Florida, is that the seller chooses title. Most everywhere in this country, buyer chooses title. Why? Because the buyer is buying this property. So any problems that happen to transfer from prior ownership, now it's the buyer's problem. But in many situations, the buyer is not in control. And so you do not want your buyer, like, what is the buyer doing? You're going under contract, you're now dreaming of this home, you're putting your furniture in there, you're paying for an inspection, you're paying for an appraisal, you're doing all these things, and then you're gonna find out, whoops-a-daisy, we don't have all the right people. If there are 2 people's names on title, 2 signatures needs to be on your document. And if somebody says that person is deceased, that maybe that's fine, but like, we will help you make sure that you have all of the right things, especially going into that listing agreement. It's in a trust. Great. Where's a copy of that paperwork?
We have to have the trust.
But do you want to wait to get
today.
you don't need to wait for the lender to now ask for the trust. Also, like if you're taking a condo listing, you do not want to wait until you go under contract to now figure out what are the codes and covenants, what is the budget,
Yeah.
what are the rules,
I just did
what are the
that
meeting
too.
minutes.
Yesterday.
No. So we will help you to ask all of the right questions to go into this listing appointment informed. We can take a look at the deed and tell you like, oh, you know, this one is good to go, this one is this, ask for this question, ask this question. Do they have it?
And Jenny, you've probably run into this, because I've run into it twice as the agent. A lot of people, you know, retired, they've moved, so it's gonna be a remote closing. And you have to make sure that both people are capable of signing. It was so horrible of a situation, because we found out the man had dementia. Nobody ever told us this. And as the signatures are going on, of course, it made it even worse, because she admitted he can't sign by himself. Can I just sign this for him? And
Yeah.
my people had they had a moving truck outside of the place. It was very complicated.
Okay, just kidding.
So
Yeah.
something like that could be challenged because if the person isn't of right mind, and then I also get people go, well, I have power of attorney. Okay, but a power of attorney is for a living person, not a deceased
Yeah.
person. So your power of attorney expires when that person passes away.
Well, this
Okay.
got ugly. 'Cause even
It
the
expires when
kids-
they
yeah.
expire. I
Yeah,
mean,
they expire.
not to be morbid, but like these things come up and then people don't understand that like, no, it doesn't work that way. And like, so I am in a situation now, my 11-year-old daughter inherited a property. But minors cannot inherit. So I had to, I birthed this child from my body. But now I am officially her guardian in Hillsborough County, and I had to provide a credit report. I had to do all this. I gave birth to this child, but I had to do all of that, and you have to establish the guardianship. Then she can inherit the house, and then clearly she doesn't have the money for the mortgage payment. So now we want to sell the house, and I have to get the court's approval to sell the house. So see me about probate issues.
Oh.
Yeah.
There you go.
Yes.
I love that, Jenny. So this is just a quick recap. I've got two more important products I'm gonna talk to you guys about, and let's get to that here. Click, click, click. All right, anybody know what an ITIN loan is? You know what ITIN stands for? Somebody tell me.
Yep.
Individual taxpayer identification number. You know better than anybody here because we've done a bunch of these over here with Paula. An ITIN loan is for somebody, not to be politically incorrect, but I have to be, they don't have papers. They do not live here legally. But our federal government, because they love tax revenue, I can't blame them on that, gives them an ITIN number. It is a social security number for someone who is living here illegally so that they can go and work and file taxes, okay? The banks are gonna tell you, hell no. We're not gonna do a loan to somebody who's not legal. Lincoln Lending Group, no matter what my politics may be, I am a capitalist. And I am here to lend to your clients, no matter what they do, who they vote for, whatever, it doesn't matter. My job is to give them a loan and give them a home. We can do these loans. Conventional terms, full doc, second home, investment, bank statements, no income. We can lend to these individuals and they have money. Paula knows they save their money. They work hard, harder than us, citizens, all right? They work very hard and they are great performing loans because they don't want to get in trouble, right? One of the best performing loan sectors in the market. Matter of fact, I have done tons of private money loans to people without papers and I have never had one miss a single payment, knock on some wood, in 15 years.
Why did you say that?
Yeah, I'm telling you, I'll lend to them before I'll lend to, my brother. Matter of fact, the only transaction, definitely not that one, but maybe that, I did have one transaction, it was with Insured years ago, where we had him bring $20,000 cash out of his Ford pickup truck to the closing. And the former owner of Insured Title made that cash work on this primary resident. Yeah, I know you believe it.
Yeah.
He's not with us anymore, so I can just say that Kevin took the money, we closed the loan, and $20,000 appeared on the closing statement. So don't ask me that.
Yeah.
But foreign nationals are kind of the opposite of ITIN. A foreign national is someone who doesn't have papers here, but they don't live here. They live in another country. This is the easiest loan you can do. Why? Because on a foreign national loan, there is no income verification, there is no job verification, there is no credit. What am I verifying? I need a passport, and I need them to wire the money from their bank of origin to the title company at least 2 weeks before closing. And if it's in a foreign language for the bank statements, which I do need bank statements for 2 months, we just gotta get it translated. Pretty easy these days. We used to have to pay $25 a freaking page to translation companies before Google and AI and Google Glass and all these things that you can just drop it into a scanner and get it translated, okay? Super easy loan, guys. Do not say no to these people. Great buying population. You meet somebody from England like we did recently who wanted to buy a couple investments over here. Now we've done like 10 loans for that family because they all want to come over here and invest. And their interest rates are in the 7s. It's crazy.
Do they need to have a visa?
No, we don't. Some of the programs will ask for a visa because they want them to be able to come here to maintain the property, but they don't want them living here. They don't want them actually even having a US bank account. They could, but they don't really want them tied. They want to make sure it's an actual investment property. You're not really buying a primary in America when you live in somewhere. By the way, we did a loan for somebody from Venezuela. a couple of years ago. So that one was a lot.
Right,
Yeah.
Sorry. US citizens that are living outside of the country, we just bumped into this. Jessica Singh, who saved the zero loan, anyway.
Yeah.
They have been living in Spain for like 3 years. And they were turned down by another lender, because they only have to be in the US 120 days.
Not true.
Spain got an approval in 3 days.
So remember that story I told you about Patty a second ago? The bank told them they had to live here for 120 days to get a loan. She called me and I go, I've never heard about that. I called my top underwriter. They go, nope, send the loan in.
You guys just gave your clear clothes on the people from Australia yesterday, right?
Yes, we sure did. And I think they got told no at places too.
Yeah.
That was actually a super easy loan. And
What's the next one?
yeah, thank you for that. Yep.
Thank you, but they, wire the money straight from the counter to the wire?
Absolutely.
Title?
Wire it straight from their country of origin to the title company.
They don't have to open like,
Nope.
LLC or something here.
Oh God, sorry. That's okay, just let us. Alright. But no, yeah, just wire the money. The reason I like wiring the money to the title company is because it cuts out a step. And then it also, if they don't have a US bank account, where are they gonna send it? Right? There's some lenders that do want them to have a US bank account, but not necessarily. Not with all of them. For natural equity lines, HELOCs for investments, yes, we can do equity lines on investment properties. The rates suck. But a lot of banks are gonna say no, we'll do it for them. The rate's gonna be like 12%, but it can be done. I mean, yeah. But yeah, if you wanna take equity from your investment, better than a credit card. No income commercial loans, guys. Got a commercial property? Don't be scared of commercial. All right, I'll handle the commercial for you. I'll walk you through it. It's super easy. We can do QM commercial, non-QM commercial, SPA commercial. We can do DSCR commercial. Hotel, motel, Holiday Inn. Yes. We get, by the way, funny story. I did that on the radio. I've got the radio show, and I did a commercial 2 weeks ago, and I was talking about commercial financing. And I literally said, hey, are you looking to buy a hotel, motel, or Holiday Inn? Give Lincoln Lending a call. We'll take care of you, blah, blah, blah. And the president of iHeartRadio in Tampa called me, it was like last Friday. He's like, Frank, I'm so sorry about this. I got to take your commercial down. I'm like, what do you mean? I was like, what'd I say? It was copyright. It's because of the song, because I said it in the same way that the song did. And I'm like, dude, are you serious? They got a call immediately from, I don't know, copyright attorney or something like that. They gave them 24 hours to have it off the air.
You're that good.
I was like, wow, people listen to me.
Somebody did Spotify and they go, oh,
Yeah,
I
that's
know that song.
something like that happened. So it was kind of funny. So I'm like, well, do I really have to come in and cut the whole commercial? Couldn't you just like take Holiday Inn off? And he goes, oh, that's a good idea. So they just cut Holiday Inn. So now it sounds like hotel, motel, come to Lincoln Lending Group. Anyway,
That works.
I learned a lesson. But hey, you know, any publicity is good publicity.
How much is required for the commercial loans to put down?
Great question. Generally 20%. Right? Generally 20%. And that is basically a DSCR commercial loan. Right? Banks want management experience, they want income. Banks will put you on shorter term loans, 10 years, 15 years, 5 years. We'll do a 30-year amortization on a commercial loan, and we'll allow interest only on commercial loans, which is what a lot of people buying multifamily need. They got to get in with a cheap payment off the bat, get it going, and then they can go into a longer, a shorter amortization. All right, so last two things we're going to talk about, private money and reverse mortgages. Private money, I said it earlier, I'm a private money lender. The golden rule, you guys know what it is?
He who has the gold makes the rules.
That's it, Greg. He who has the gold makes the rules. You're looking at the guy. So private money, I can lend to anything I want because it's my money, obviously. I'm going to tell you what my terms are, and I'm going to tell you an idea of what I like to do. We already talked about bridge loans. I'll do the little short-term loans. You need money for a couple days just to bridge a transaction. We'll do that. Dilapidated houses for flips. I mean, I have so many other programs. If you send me something and say it's private, I'm going to chat through with your client and try to put them into one of these other programs. I still get paid, and I get your client a better deal so I can sleep at night. But God forbid we can't do anything else, or they need private for some reason, or the seller will only take cash, right? Well, I'll just do private on it, whatever. Private money, I generally want to see at least 25% down or 25% equity, all right? My terms are 12% interest-only payment, 1 year term on a bridge loan, no prepayment penalty, all right? That's really what sets me apart. Keep my money for a day, keep my money for 11 months and 29 days, and you're not getting charged a prepayment penalty. If you pay me on time and don't miss anything over that year, yes, I will extend it. I got one lady at $350,000 out. I've extended her like 4 times now, just because I'm happy she's paying me on time. I don't need to take the money and re-lend it again. I'll just keep extending her and charging her a little fee every time I do it. Great. I do charge points. All right, because I don't have a prepayment penalty, I charge 5 points. People are like, oh, that's a lot of money. Well, most guys are charging between 2 and 3, and they've got a 3% prepay. Right? So it's basically the same thing. I'm just taking you off the hook on the prepay and saying you can do whatever you want with it. Now, funny people are lining up for the money. I don't have enough money to lend. So I've got partners that have more money than I would even know what to do with to lend. We have yet to find a deal that we can't close, if it makes sense. This one guy sold his business for $100 million. He likes to keep $50 million on the street, right? So bring him over. We've lent on yachts. We've lent on boats. We even did a gemstone loan one time. Obviously, real estate is the forte. That's what I prefer, to have first lien position on your real estate. But bring it over. I'll tell you in 5 minutes with a call with your client if we're going to lend on it or not. All right, and we'd like to, this is a great slide for you guys. Everybody that's been taking pictures, snap this one. I even reference this every once in a while. This is your pocket guide, and I think I need to update a couple things on here, but it's going to be close enough for you. It's your pocket guide to FHA, Fannie Mae, VA, and USDA loan terms. So next time your client asks, what's the minimum credit score or the maximum loan amount, or tell me about what the rules are on occupancy or how many units, there you go, right there. Grandma and grandpa need help. I'll do this, Jenny. The seniors own a home outright. Okay? They don't have to own it outright, but you got seniors who are, by the way, we define seniors with reverse mortgages as 55 and up. All right? Most banks say 62, right? Can't get your free coffee till 60, sorry. I used to mess my mom about that all the time. And she is a free coffeer, I'll tell you that. Anyway, so if you're 55 and up, you can potentially qualify for one of the reverse mortgage products. There are 2 main products in reverse mortgages. The reason I'm gonna tell a bunch of real estate agents about reverse mortgages is because you can use them for purchases. There's a lot of people moving from California, Chicago, Illinois, Minnesota, and they're selling these houses that are pretty expensive and bringing this cash down here, and they're dumping all their cash, all their savings into this house. It's stupid. They can put 50% down, get into a reverse mortgage, have 50% to go give to a financial planner, and actually make 8-10% on their money to offset the interest on their mortgage, which they don't even have a payment on, all right? Reverse mortgages had a stigma, and they still do, that if you do a reverse mortgage, you'll lose your house, all right? It's the number one thing I have to battle every time I talk to somebody about a reverse mortgage. I'm gonna tell you why that doesn't exist anymore. In 2014, the US government finally did something smart. They realized that seniors were possibly losing their houses on reverse mortgages because they allowed them to choose whether they put the loan in their husband's name or their wife's name. And just like many of you in this room make a choice of whose the loan is in their name, you're making the choice because of credit usually. Who's got the better income or the better credit? Let's put it in that person's name, they're gonna get better terms. They did the same on reverse mortgages. They chose the older of the two to put the reverse mortgage in. Why? Because in a reverse mortgage, it's only based on age and equity. The FHA version of reverse mortgage is the only loan program in this country that you can be in foreclosure right now, about to lose your home, and I can close you on a reverse mortgage and save your home. All right? So what the government did was, they said, from now on, 2014, June 2014 and past, if you do a reverse mortgage, both have to be on the mortgage. Husband and wife both have to be on there. So that way, if something happens to one before the other gets to live in that house with all the benefits of the reverse mortgage for the rest of their life for free. So anybody who you walk into and say, reverse mortgage is good, and they say, no, they're bad. You say, no, they're not. From 2014 forward, no one will ever lose their house on a reverse mortgage on the HECM product ever again. It is literally impossible. Unless, of course, they don't pay the real estate taxes. And the county takes your house. But that's not losing your house to a mortgage. All right? That's just you not being very smart. But and it's hard for them to even take your house that way. But so reverse mortgage has 4 benefits. I'm just going to tell you my grandma's story instead of thumbing us through a bunch of slides, because I did one for my grandma back in 2005. Grandma Gladys, this is true, rolled cigars for Have a Tampa for 45 years. All right. What did she get for doing that? She got this little red pin that I have in my safe now that says Have a Tampa, and they gave her a speck of a diamond every 10 years. That diamond is such a speck, it's not even worth me walking in somewhere with it, nor would I ever sell it. But that's what she got, right? Well, my grandfather was always a hustler. He was a real estate agent in the 50s. He was always involved in some cash business, doing something, bringing in money. So my grandma never really had to worry about her expenses. So I went to Jesuit. They lived out on the Hillsborough River in Wellswood. You guys know where that is? And I would go visit them every day after school. She'd make me a sandwich and give me a yoo-hoo. And I went off to college, came back, and I visited her every once in a while still. My grandfather passed away when I was in college, right before I graduated. So I come back and visit Gladys, and I think it was like the second or third time coming back after I was a young mortgage broker. There was no sandwich in the fridge. There was no yoo-hoo in the fridge. And I started noticing there's like no food in the fridge. And I'm like, well, this is weird. So, you know, I mean, like in my early 20s, I'm like, Gladys, I'm like, is everything okay? Do you want me to take you to the store? Like, you haven't been to the store or something like that. She starts crying. My 83-year-old grandma is crying to me right now. I'm like, And she's like, no, honey, when your grandfather passed away, all I got was his Social Security. It was $1,550 a month. We still have a mortgage. I'm like, what? You have a mortgage at 83? Mortgage payment was about $500 a month. Rest of her bills, medical and all this stuff totaled about another $500 a month. It left her $500 to live on, period. That's why there was no yoo-hoos in the fridge and no sandwiches. That's the part I saw. All she was living on was cafe con leche, black beans, and rice, basically. And it was pretty freaking sad. So I had just, as a young mortgage broker, just learned about the reverse mortgage product. And I looked up her house, I'm like, okay. I was like, you have a crap load of equity. You only owe like 40 grand on this house. It's probably worth 200 at the time. And I said, do you want to try to do a reverse mortgage? And she's like, anything. Let's just do what I can do to figure this out. So at the time, the average lifespan for a female in the state of Florida was 79 and a half years old, right? Remember I told you a minute ago, reverse mortgages are only based on two things, age and equity, right? So she was 4 years past how long she should be alive. All they use is an actuary table, right? So the bank rolled out the red carpet for Gladys. They're like, we're gonna give her everything. Now, reverse mortgage, you can get up to 4 benefits. If you qualify for a reverse mortgage, everybody gets number 1. They pay off the mortgage. If there's a mortgage, it's paid off. A reverse mortgage is just a mortgage. It's another common misconception. People think it's different, or you give the loan, the house to the bank. No, you're still entitled. It's still your home. You still have a mortgage. You can still sell it, refinance it. You can even make a mortgage payment on it. It's just a loan. So here's what they gave Gladys. Paid off that 40 grand. Immediately, her income went from $500 a month to $1,000 a month, right? That would have been enough to help her right there. They gave her number 2. They gave her $35,000 the day of closing. You can get cash out on a reverse mortgage. So if your house is free and clear, you can get cash out because there's no mortgage to pay off, right? There's one bucket of money. I'll explain that in a second. The third thing that they will do is they could give you a monthly stipend for the rest of your life, right? She wanted a stipend. You can choose any term you want. You want it for 1 year, you want it for life. She chose life. Hindsight, maybe I wouldn't have made that decision, but you'll understand in a second. They give her $500 a month. Her income, boom, back up to $1,500 a month. $500 a month, plus no mortgage, plus the extra $500. She's back home, right? So things get interesting. Gladys goes and actually got interesting because she went out and bought her first new car she'd ever owned in her entire life, a beige with brown leather seats Toyota Avalon. I thought it was the ugliest car I've ever seen, but she literally cried when we picked it up at Stadium Toyota. And she's like, this is the first new car I've ever had. I'm like, great job, Granddad. Anyway, so at least I got to see the happiness. But so went on, lived her life. Gladys ends up getting an infection in her left leg, or foot, about 6 months in. Goes to the hospital, she's in there for a while. We go, the doctors tell us, okay, she's got gangrene, right? And it's going up her leg. And they said, to save your grandma, we gotta cut her leg off from the knee down, right? Almost 84 years old at this point. And she's tough. And she's like, take the leg. I got plenty of years left. And I'm like, okay. So they took the leg, all right? They're like, okay, we're gonna give her a wheelchair and this and that. She goes, no. She goes, I want a new leg, right? So they fit her. So they fit her with a prosthesis. Gladys learned to walk over the next few months in rehab on her prosthesis. She named it Peggy. We go to, I'm not joking you, this is real. We would go, she loved the Olive Garden. So we go to the Olive Garden like once a week. She's the funniest lady. She would take her damn leg off and set it over to the side and like make the waiters be like, what the hell is going on? And she'd just laugh her ass off and I'm like, Jesus Christ. Anyway, so that was funny. Everything was good. Well, remember, it got 4 things. She's only gotten 3 so far. At the end of 12 months, they give you an equity line of credit. They gave her another $45,000 on the equity line of credit. Couldn't have worked out better because we got to take that money and outfit the house for her. Ramps, scooters, those recliners that lift you up, lowered the cabinets, did all these cool things to the house. Gladys lived to 93 years old. Before she died, she told me that she lived the best 10 years of her life because she felt like she had financial freedom, and she also said, I have to put up with your grandfather. True story. I thought it was the most amazing thing, but it got better, all right? She didn't have a pot to piss in when I first got her the reverse mortgage. She didn't tell us, but during that time, she went to Bank of America over in Hillsborough Avenue and met with a financial guy and started tucking away money, right? Well, a couple interesting things happened. I did this loan in 2005. What happened in 2008, right? Market crashed. Well, in a reverse mortgage, remember, it's just a mortgage, the interest is rolling against the balance. So every month, instead of you making a payment, the interest portion of the mortgage adds to your principal balance. So let's say she started with $150,000 because of the money they gave her and blah, blah, blah. So every month, maybe it's at 151, 152, whatever. Never will have to make a payment, all right? She has all this money, has the equity line, so her value tanked. So a perfect storm happened, which is very rare in reverse mortgages. We haven't seen this happen since, but her value went down dramatically, her balance went up. She was negative equity very quickly on the reverse mortgage, right? So fast forward, she passes away, right? The house is now underwater by about $50,000. A couple of really cool things happened. The bank, first of all, doesn't force the family to do anything for 12 freaking months. They call the next of kin, which was my father and I, and say, we're sorry about your loss. Do you know what you want to do with the house? We knew the answer because I'm in the industry, but a regular person could say, no, we're not sure yet. And they would say, no problem, we'll call you in 90 days. They will do that call 4 times. The 4th time, the family has to make a decision. Why do they do that? Because the interest is ticking. They're going to get paid one way or the other eventually, and they're going to get paid more if you wait, right? By the way, reverse mortgages are FHA backed. What does every FHA loan have? PMI. Who does it protect? Not the client, the bank. So the bank's going to get their money either way, right? They're protected. So what we did was we signed a deed in lieu of foreclosure, handed the house over to the bank, boom, boom, that was it. 3 pieces of paper my dad and I signed. It was over. But it wasn't. We found out from Bank of America right after her funeral that Gladys had a somewhat substantial amount of money in the bank. How the hell did that happen? Because she started tucking money away for the grandkids to Bank of America. And what happened after the financial crash? The market went like this. So Gladys, maybe she was smart enough to know this, maybe not. Unbeknownst to her, she bought low and sold high. She was buying stocks and investing while the market was going down. The market starts ripping up in the V economy. When she passes away, all of a sudden, I got some money, my brother got some money, my dad got some money. We're all sitting here like, holy shit. And that's where I realized the best part about a reverse mortgage, it's a non-recourse loan. Even though that bank took that house over that was underwater, they couldn't touch a red cent of what she left us. And one more cool thing would have happened had this house been, this mortgage been done after 2014. Obviously my grandfather wasn't there, so we don't worry about that cool rule. I call it the Save Our Family Homes Act. A lot of people have homes in the family for years and years, and they want to pass them down. So parents won't do a reverse mortgage because they're worried about the family losing the house, right? The new rule says that I could have bought, if I had done this after 2014, I could have bought that house at 5% under the appraised value, regardless of what she owed on that mortgage. The house could have stayed in the family. The bank would have written off all the money, we would have gotten our inheritance, and I would have owned a house on the Hillsborough River. And that, my friends, is reverse mortgages. So when I do presentations for your clients, I do them once a month. I got one on the 19th in my office. I make sure it's a very small presentation. I don't want to scare seniors and pack them in or anything like that. But I go through this little presentation here. There's no app needed on a reverse mortgage ever, not in the very beginning at least. All I need is a name, date of birth, estimated home value, estimated balance, and how much the tax and insurance are, and I'll tell them same day everything they qualify for. Don't need to run their credit, because most of the products are not even credit driven. In the presentation, this is what it looks like for them. We say, what is a reverse mortgage? Who's it best for? Do I need good credit? I even had a doctor do one who was 90 years old. He had tons of money. He just wanted to see what his kids would do with inheritance money without hurting his finance. His daughter bought a BMW. His son bought a house. Guess which one was invited to dinner? Not the daughter. They want to watch the kids get money. Do I still owe for the interest? Yes. But by the way, you can sell the house. It's just a payoff. There's nothing weird. Do I still own it? Absolutely. You're on title. Can I lose it with a reverse mortgage? We went over that. Can I leave it to my heirs? Absolutely. What if it has no equity? We explained what happened with Gladys already. How can I make sure my family can keep the family home when I'm gone? Just explain that to you. So we take it much slower. What are the 4 major benefits of reverse mortgage? And then I go into the benefits with them again. And then I tell the Grandma Gladys story.
And what is the age now? You said it was 79 then?
So the age, that's how old she was. That was the average lifespan at that time.
Lifespan, yeah.
The minimum age on the HECM product, which is the one that allows you to have like terrible credit, be in foreclosure and all that crazy stuff, which is a great one to save your clients, is 62, right? The conventional product, which we can do condos on, right? You only have to be 55 to do that one. So that one also, if you're a little older, you can still choose the conventional one and they'll give you way more money, right? The difference is the rate's higher on the conventional one, but most people who take a reverse mortgage don't care about the rate because they're never making an interest payment. Interest is just being deferred. And you can do anything you want. You can refi it, you can sell it, you can move into a home, anything you want to do. It's your house. That's the #1 misconception with reverse mortgages, that somebody else owns the house.
So if someone has a reverse mortgage, they forgot to pay the, property tax or all of that insurance, and then they're gonna foreclose, can they do another reverse mortgage?
Yes, absolutely. You can refinance a reverse mortgage with a reverse mortgage. I will say what happens is if you have bad payment history, whether it's tax insurance or bankruptcies or whatever it is, and you're doing the HECM product, they will require an escrow holdback. They're not gonna let that person get in that position. So what they do is they take about 10 years of taxes and insurance and literally hold it in an account for them, withhold those funds, and they pay them for them. So they will protect these guys. They will make sure they're okay. The conventional program is stricter, so you just can't have bad credit on the conventional product. But on the conventional product, they'll give you an equity line from day one. They'll do adjustable equity line ones. They'll do regular fixed. They'll do all kinds of things. Reverse mortgages, I have found to be the most beneficial loan product probably that I've ever sold. And I bring it up to you guys because you're gonna run into people, especially listing presentations and stuff, and the people are like, oh, we just have to sell, we can't afford our house. And you're like, you have so much equity, where are you gonna go? You sell a house now, you're moving into an apartment and spending the same almost as you are on the mortgage, just call me. We'll put them on a reverse mortgage and get them taken care of. And I can legally give you some marketing dollars too, if you send me stuff, because I know you can't get paid. So I wanna help you out, because we're partners. Any questions on the reverse? Any more? Guys, that's pretty much it. Imagine if we can do all the complex loans, imagine how well we do your easy loans. Our rates are lower than everybody, so give us a shot on that. Don't just think about me as the pooper scooper. Think about me as the guy who's gonna do everything, starting with your good A paper loans. And that's it, guys. Thank you for coming. I'm gonna hang around if anybody wants to ask some questions. I know Mari wanted to meet with me and one other person wanted to meet with me about something. We'll do that in a little bit.